Portfolio Builder members, this is your July 10th evening update. I'll start off with the top news and then finish off by looking at our positions in our three portfolios. Fed signals bumpy road ahead. To summarize, China is slowing down. If China slows down, that has tremendous effects on the emerging markets, which can then bleed into Europe. Europe is having economic troubles due to Brexit. So everywhere is deteriorating, and this is sending the S&P 500 to all-time highs. A little bit of a pullback in the Treasury bond prices. Yields went up a little, and that's because everyone is rushing in to buy stocks because the Fed came out today and confirmed they will lower rates. Quick look at the charts. Here's the SPY breaking into all-time highs. I believe it touched $300 today, first time ever. That's the 1 month view. Here's a look at the 1 year view. Hard to believe we were just at 234 around Christmas. Here's your 5 year view. And so you can see it's on the trajectory to keep climbing with low interest rates as long as earnings can remain strong. The problem is earnings will have trouble remaining strong if world growth starts to deteriorate. So whether or not that happens is completely dependent on President Trump and his trade war with China. Timing is critical. Does he feel confident to apply the pressure now before the 2020 election, or will he wait until after the election? When you look at the lineup of competitors headed to the race, they seem quite weak. Here is FXI, the large cap Chinese ETF, which we have been using as a way to profit from a potential increase in the trade war. So we've been riding the SPY for safe profits with covered calls and also buying put options against the SPY, but then also taking some of our profits and investing in put options on FXI. Now we have a long time for those to pay off. But as you can see, despite the S&P 500 going up, in general, the Chinese stocks have been suffering. And so there's the 5-day view, the 3-month view, and the 1 year view. Now, I would note that if the trade war was really relieved, and the Chinese had actually said they gave up and agreed to terms that Trump was happy with, and he confirmed that, that's when all of a sudden you may see bigger gains in the emerging markets, which has been a prediction that is due for quite some time, as long as there's not the biggest economy really gutting out the next in line, which is obviously China. Here's a look at the bond market. Of course, the bond market was demanding that rates be lowered for quite some time, so it already had this well priced in. And most likely, the next big bump in the TLT will be if and when there is a surprise increase in escalations with the trade war. So at that point, we might see the SPY pull back a little bit and TLT jump. Now, of course, that's why it's so important to have a large portion of your portfolio in the TLT. It's really the safest and smartest way that you can guard your SPY position. Or if you're following our Tuesday trade alert, our Apple position. Here's the 1 month climb on the TLT. And here's that 5 year view. If we just get to 2016 level yields, this can climb up to 143, which is a $20 hike. And if we get anywhere near what some of the bond experts are predicting, such as Stanley Druckenmiller, this could go well over 200. Now, in our Diamond program, we are trading Apple instead of the S&P 500 currently, or the SPY ETF. And of course, Apple's had a very nice run over the past 1 month, going from 190 to 205. And one big benefit of trading Apple is that it has had substantially more volatility over the past year, so it demands a much higher yield when selling call options. So that makes this trade alert more profitable and more protected than the SPY does in terms of the yield we can get from selling a call option. Now, of course, if the trade war does escalate, Apple could very well be a target of the Chinese, just like we targeted Huawei. Here's the 5-year look at Apple. And again, this is a top position in the SPY ETF. It's Warren Buffett's largest position. And it's one of the most valuable companies in the world. Here are some Twitter screenshots that I found important. Fed realizing it's manipulating the markets, quote, while overall financial conditions remain supportive of growth, those conditions appeared to be premised, importantly, on expectations that the Federal Reserve would ease policy in the near term. That's Jay Powell. FOMC minutes show many Fed officials see rate cuts warranted. The long view, why uncertainty reigns supreme. Fed has completely flipped messaging, but behavior is to be determined. Trump is sending mixed signals on trade policy with very serious growth implications. Growth is fading in China, which has low visibility, and their current stimulus, tax cuts, is untested. He carefully explained the reasons why the policy committee has shifted its view this year and noted that cross-currents have reemerged, creating greater uncertainty. Despite a current trade war truce with China, Powell continued to stress downside risks to the outlook. Uncertainties about the outlook have increased in recent months, Powell said in the text of his remarks. Economic momentum appears to have slowed in some major foreign economies, and that weakness could affect the U.S. economy. Moreover, a number of government policy issues have yet to be resolved, including trade developments, the federal debt ceiling, and Brexit. Mediocre tailing 10-year auction, prices at lowest yield since November 2016. This lack of demand is why we saw the TLT pull back a little bit, although the TLT is not tracking the 10-year directly. Powell, if it comes to buying securities, there will be no shortage of treasuries to buy. The big picture here is that at some point, the Treasury may have to start buying the government's debt. And in doing so, it will put a fixed yield on these bonds. And so now the Fed is stuck in a corner. If they raise rates, everyone's going to freak out, sell their treasuries, and then how will the government be able to fund its debt? Powell on the USD as world reserve currency. I don't see that under threat right now. Bank of America is expecting a 25 to 50 point cut in the next 3 weeks. Fed doesn't see current size of the balance sheet as a limit to buying bonds in the future. So we just got done letting a lot of bonds hit their expiration, effectively lowering the balance sheet, and now they're getting ready to ramp it back up. Now, what's going on with the trade deal? Trump softened stance on Hong Kong protests to revive trade talks. White House economic advisor Larry Kudlow, China expected to move forward with agriculture purchases from U.S. even as trade talks continue. Relaxed U.S. government restrictions on Huawei would only be in place for a limited time period. So again, the big deal made was that no more tariffs for now. We'll allow Huawei to still buy certain products from the U.S., and they are going to help out our farmers who have been having a terrible time and are also critical to Trump's reelection. A U.S. official says Lighthizer and Mnuchin spoke with Vice Premier Liu He and Minister Zhang Shan today to continue negotiations aimed at resolving the outstanding trade disputes between the United States and China. Talks will continue as appropriate. Here's a current look at our basic portfolio, which is published Monday, Wednesday, Friday. It does require quite a bit of work. You have to be willing to do a 2 to 3 minute trade at noon Eastern, Monday, Wednesday, and Friday. So it's not a whole lot of time commitment, but the frequency can be quite more work than standard buy and hold investors are willing to do. So what's the big benefit? The big benefit is we can sell a call option and buy a put option and essentially make it very, very hard for your portfolio to ever have drawdown. And in effect, we're selling a call option to a stock speculator who is a little bit overzealous, and we're buying a put option from someone who thinks stocks will never go down substantially. So those are two deals I really like to take while owning the S&P 500. So we're currently at a 9% return in just under 7 months. So we've slightly outperformed our goal of safely generating a 1% return per month. Now here's a look at our diamond portfolio. We are currently long only Apple until the trade war has been resolved. If it is resolved, we would expand into a basket of the top stocks held in the S&P 500, including companies we're not currently holding, such as Microsoft, Facebook, Intel, Cisco, Comcast, Bank of America, and Wells Fargo. For now, it's much easier to manage the Apple position. It has the highest covered call yield, and it's still one of the most important companies. In fact, arguably, the only companies more important or on equal weight would be Microsoft, Google, and Amazon. However, Microsoft's volatility is so low, it's actually a lower yield than the S&P 500 in terms of selling call options. And if we look at Google or Amazon, those cost in the range of $1,000 to $2,000 a share. So to do our covered call strategy makes it quite expensive. So that's why we're doing Apple. It's the biggest portfolio position in Warren Buffett's Berkshire Hathaway, and it's the number 2 position in the SPY ETF and QQQ ETF. To also balance out the returns, we look at how Ray Dalio has managed the world's largest hedge fund, and essentially it's a balance of the TLT and the SPY. Very simple, but when you own both, they guard one another, and typically they go up together in the long run. However, in the short term, when one goes down, the other goes up. The net result is that you can have extremely low total drawdown in your portfolio. Now, this only trades on Thursday. It's currently long the TLT, expecting that the trade war may escalate, and it's waiting for a good opportunity to buy Amazon and Google at a significant discount. So there will be times when this portfolio will rotate into Google or Amazon, but currently it's just protecting the rest of our portfolio from downturn by owning the TLT. So to review, if you do follow all 3 programs, I wouldn't put more than half of my total portfolio into the SPY because I'd want to have the other half following the TLT trade. And if you do want to follow the Apple trade, it's a great substitute for the SPY, or if you do prefer, you can put a quarter of your portfolio into the Apple trade and a quarter of your portfolio into the SPY trade. That's a wrap for today's update. We will have a new trade alert tomorrow for our Whale Club members. If you're interested in upgrading your free trial or expired trial, call Chris, 760-803-5335. Expect another evening update tomorrow, and then the next SPY trade alert on Friday. Thanks.